My name is Darren Charles, and I'm the Company Secretary and CFO. Today's meeting is being held as a hybrid meeting. We are pleased to be joined by shareholders in the meeting room here in Sydney, and welcome those of you participating online in audio and video format via the Lumi platform. We hope that the hybrid format allows as many of our shareholders, proxy holders, and guests to attend the meeting as possible. For online attendees, written questions can be submitted at any time during the meeting. You can also ask questions directly during the business of the meeting when each resolution is being considered. To ask a written question online via Lumi, select the Messaging tab at the top of the Lumi platform. Type your question in the box towards the top of the page and press Send. A copy of questions you submit, along with any written responses, can be viewed by selecting My Messages. Please note, while you can submit questions from now, they will not be addressed until the relevant time of the meeting. Please also note that your questions may be amalgamated if we receive multiple questions on one topic. Finally, due to time constraints, we may run out of time to answer every question. If this happens, we will answer those questions via email as soon. To ask a question verbally using the online system, click Request to Speak the broadcast window. The audio questions interface will now be displayed. You will be prompted to confirm your name and enter your question topic. Please submit these details and select Join Queue to be connected. If prompted by a pop-up, select Allow to grant access to your microphone, then follow the instructions. The agenda for today's meeting will see our Chair, Alison Deans, provide her address to the meeting, followed by a business update from Managing Director and CEO Phil Hodgson. After Phil's update, we will hold a short Q&A session on the update to be followed by the formal items of business of the meeting. There will be multiple opportunities for questions and answers, including after Phil's update, after each item of business, and before the meeting closes. Shareholders and proxy holders who are attending online have the same ability to ask questions and vote as those attending in person. To help facilitate the business of the meeting, for each individual item of business, we will invite people in the room to ask questions before then inviting people attending online to ask questions via the Lumi platform. I will now hand over to Alison for her address.
Good morning and welcome to Calix's 2025 Annual General Meeting. Calix acknowledges the traditional owners of the land on which we meet, the Camaragal people, and we pay our respects to Aboriginal and Torres Strait Islander people. I'd like to start by introducing the board members attending the meeting in the room today. We have non-executive directors Helen Fisher, who is chair of our Audit and Risk Committee and Sustainability Committees, Sarah Ryan, who is chair of our Technology Committee, Peter Dixon, who is chair of People and Remuneration Committee, and CEO and Managing Director Phil Hodgson. I'd also like to welcome Calix's auditor, Daniel Camilleri of KPMG. Last week marked 20 years since Calix's founding. 20 years since our chief scientist, Dr. Mark Skeets, and his co-founder, the late Connor Hawley, invented a better way to process minerals and metals. Better because it has the potential to be more efficient and flexible in its energy use and more efficient in its use of mineral resources. Better because it has the potential to avoid and mitigate hard-to-abate sources of industrial carbon dioxide. And better because it has the potential to improve the viability of making cement, steel, aluminium, and critical minerals in a decarbonising economy. 20 years on, we've come a long way. From a simple but revolutionary idea for a new type of kiln to a platform technology focused on some of the world's largest heavy industries, in partnership with global leaders and with a clear strategy for demonstrating and licensing each application. At the same time, we've built a growing revenue base and carefully managed our costs, extending the runway for executing our commercialisation strategy. In the 2025 financial year, Calix reported significant progress towards these goals And I'm pleased to note that we've continued this trend in the first quarter of the 2026 financial year, announcing some significant commercial milestones and new strategic partnerships, while also recording further revenue growth and expense management. In iron and steel, we were delighted to announce yesterday that Rio Tinto, one of the world's largest iron ore producers, will support the demonstration and commercialization of Calix's zero-emission steel technology, or ZESTY. Under the terms of the agreement, and subject to confirmatory due diligence and project milestones, Rio Tinto will contribute over $35 million of cash and in-kind support for our ZESTY green iron demonstration plant. The plant will be located in Kwinana, Western Australia, and will continue to be developed as an industry-wide facility. Rio Tinto's support for the project is a significant contribution to the matched funding and commercial commercial commitments required to progress the $44.9 million ARENA grant, which was awarded in July 2025. In alumina, a new industry partnership with Norsk Hydro, announced this quarter, aims to develop the Calix technology for the electrification of alumina production. Calix and Hydro will jointly develop our zero-emissions alumina, or ZEAL technology, through material testing and engineering studies that are expected to deliver over $1 million in revenue to Calix, and also develop designs for potential applications in commercial alumina refineries. In lithium, and in partnership with Pilbara Minerals, we remain on track to complete demonstration of our midstream demonstration plant in Western Australia this calendar year. This plant aims to electrify the most carbon-intensive step in the production of lithium battery material. Producing a concentrated lithium salt at the mine site also aims to reduce transport costs, unlock ore deposits, and enable new supply chains from ore sources to end markets. Completion of the midstream demonstration plant will be a significant milestone for all our applications, our first fully electric plant at a commercially relevant scale. And we look forward to sharing more on this exciting milestone in the coming weeks. In cement and lime, we delivered an important plant upgrade and operational test campaign at our Lilac 1 facility that demonstrated the stability and flexibility of the Lilac technology. We also continued to progress our scale-up projects. However, market headwinds have led to slower progress than we hoped. Construction of Lilac 2 in Germany remains subject to permitting and financing being secured at the project or subsidiary level. Meanwhile, Project Zeta, an electric lime calciner in South Australia with carbon capture and use, has now moved into front-end engineering and design, having completed its pre-feed stage on time and on budget. Project Zeta is actively sourcing the project-level funding needed to match the existing grant from the Australian government. Unfortunately, Lilac's US projects in cement, lime, and direct air capture remain paused pending the outcome of the US Department of Energy funding reviews. In a magnesia line of business, investment in new facilities in the US has added the production capability and market reach needed to underpin ongoing revenue growth in our largest water treatment market. In our Australian water treatment business, growth was driven by new contracts with Unity Water and City of Gold Coast. Together, these contracts have secured long-term engagements with two of the largest consumers of our product in Australia. As I touched on earlier, Calix has delivered revenue growth and cash flow discipline in FY25, and I'm pleased to report that this has continued in the first quarter of this financial year. In FY25, Calix's products and services revenue increased by 17% to $28 million. Calix also implemented cost reduction measures that delivered a 23% reduction in its operating cost base in the second half of the financial year relative to the first half. And in the first quarter of FY26, Calix's products and services revenue were up 28% compared with the same period in the previous year. Gross profit was up 36% and operating costs were down 23%. This revenue growth and disciplined cash management mean Calix continues to have an 18-month cash runway to pursue further commercialization milestones and subsidiary and project funding. In terms of the market environment in which we operate, current uncertainty and economic pressures may have slowed the pace of industrial decarbonisation, and some changes in policy direction in the US have drawn public attention. And these pressures appear to have had a strong bearing on market sentiment towards clean tech stocks. At the same time, long-term drivers of global industrial decarbonisation continue to move forward. 77% of global GDP remains covered by national net zero commitments, or 84% with the inclusion of US state commitments. In 2025, China added cement, steel, and aluminium to its emissions trading system. As a result, 80% of global emissions from steel, cement, aluminium, and fertilizer are now covered by carbon pricing through either planned or existing policies. In Europe, following the introduction of the Carbon Border Adjustment Mechanism, the EU will begin phasing out exemptions to its emission trading system. Starting in 2026 and fully implemented by 2034, producers of cement, steel, or aluminium, either in the EU or importing into the EU, will be required to pay the EU ETS price for their carbon dioxide emissions. And in the US, a fixed price tax credit for captured carbon dioxide was enhanced under the Trump administration. Specifically, carbon dioxide that's captured and used will now receive the same credit as carbon dioxide that's permanently stored. And finally, in Australia, a critical minerals production tax incentive and a green iron investment fund were launched in February 2025. And an ARENA Innovation Fund is expected to open soon, including $750 million in funding for green metals such as iron, steel, alumina, and aluminium. It's not surprising that there are bumps in the road to net zero, but the majority of the world remains committed to the destination and is deploying the policy drivers needed to get us there. Sustainability sits at the heart of why our company exists, and our 2025 sustainability report outlines the progress we've made against our key sustainability ambitions. This included strengthening our governance, setting outcome-based targets, and enhancing our ability to measure and report our impact. We also continued our commitment to the United Nations Global Compact. As we look forward to the remainder of the 2026 financial year, we have a clear focus on delivering our strategic priorities. That is continued growth in revenue and gross profit combined with diligent cost management, and the delivery of further commercial milestones and subsidiary or project level funding. In iron and steel, we aim to complete financing for the Zesty demonstration plant and commence engineering, procurement and construction management. In alumina, we aim to complete material testing with Norsk Hydro, while in lithium, we look forward to the imminent completion of construction in the midstream demonstration plant with Pilbara Minerals. In cement and lime, our Lilac business aims to complete the permitting and funding needed for Lilac 2 to commence construction and to complete a FEED study and secure funding for Project Zeta. In conclusion, we've made considerable progress against our strategy for commercialising the Calix technology, focused on the most attractive market opportunities. And at the same time, the team is demonstrating a disciplined approach to growing revenues and managing costs, extending the runway further for delivering commercial milestones and securing subsidiary and project funding. On behalf of the Board of Directors, I'd like to thank our senior management colleagues and all the staff for their dedication to the goals Calix has set. I would also like to thank our customers and partners for their continued support and collaboration. And finally, on behalf of the whole Calix team, we sincerely thank you, our fellow shareholders, for your continued support. We hope you continue to share our conviction in the opportunity ahead of us and the potential to create long-term value for shareholders, industry, and the planet. Thank you, and I'll now pass to our CEO, and Managing Director Phil Hodgson.
Thank you very much, Alison, and thank you all for being here, and to those online, welcome as well. Just in terms of Calix's mission, I've just got to get this thing moving forward. We continue to target, obviously, decarbonisation of heavy industry, and at the same time, continue to grow our revenues and manage our costs. And it's that growing revenue piece which is particularly important for us as we navigate the next few years. But the commercialisation progress that I'll talk about today is also really important for us. And yesterday's announcement was obviously really important for us. Joint development agreement with Rio Tinto. You can see here it's non-exclusive. So the agreement with Rio Tinto has them supporting us to develop the technology. It is non-exclusive, so we are free to continue to work with other iron ore and steel players in developing the technology. But Rio obviously see something in it and decided to back us, and it's great. They've been great to work with over the course of the last few months to get this deal across the line. The deal, in essence, constitutes both cash and in-kind. So there's 8 million in cash in two tranches, 3 million in tranche one, and 5 million in tranche two. The 3 million in tranche one is subject to customary due diligence associated with developing the project, things that we would have done anyway. And the 5 million is to get the project FID ready. So really it's to get to that point again that we would have been normally doing by ourselves. But it's great to have Rio next to us as well, helping us to get us there. And those 3 and 5 million tranches are triggered on completion of that due diligence for the project. But also there's another 27 million in kind, and that 27 million in kind is associated with all sorts of support, technical and engineering support in an ongoing sense, tolling and provision of iron ore, none of which are small matters when it comes to a demonstration unit. And so that level of support is significant from a company like Rio, and it really does help us start to think through and de-risk this project longer term. So really important for us. If we just move to the next slide, sorry. So just a bit more on Rio Tinto. It outlines the way that Rio may actually partake in equity in a Zesty subsidiary. So the 8 million is convertible by Rio at their option into equity in a Zesty subsidiary. Now, you may recall that with our cement and lime business, the Lilac business, back in 2021, we had an investment directly into a subsidiary of ours called Lilac, and that was from an investment fund called Carbon Direct, and that was €15 million for about 7% of Lilac. What that deal did for us is it gave great look-through value on the value of the Lilac business and obviously allowed that business to continue its commercialisation pathway. And we've been very clear about our strategy with respect to developing the iron and steel business. It's the same. We're looking at getting impact funding into a subsidiary called Zesty. And interestingly enough, this deal with Rio gives them the option to do the same. They can join alongside impact funds in investing in Zesty at their choice. And so our strategy remains to continue down that pathway. The key thing is that if you have a look at the way impact funds have invested over the last couple of years into clean technology, there's always a strategic involved. And what I mean by that is there's always an industry participant who's always been there to help validate the technology and de-risk it. And so with Rio on board now as part of this JDA, that significantly helps us in our strategy to get funding into a subsidiary to continue to pursue the iron and steel opportunity. So a really important piece of the JDA is that option there for Rio. The other thing in here is we've agreed the sort of terms, the key terms around a licensing agreement. The full licensing agreement will need to still be put in place. But the interesting thing about this is our business model is about licensing ultimately the technology. The business model is not capital heavy. The customers of the technology, the ones that will deploy and invest in the tech, and pay us a licence fee as that technology is used. So that's been our business model, and we've sort of proven that out. We've got a couple of licences agreements in place in our Lilac business, one with Heidelberg Materials and another one with Heirloom for the direct air capture opportunity. We've got a licence agreement with Pilbara Minerals as well now. And this is now the third line of business that we're starting to get the proof of concept or proof of business model, if you like, with respect to licensing this technology. There were a lot of, even 2 or 3 years ago, before we started to get these agreements in place, people were going, well, where's the proof? How are you going to license this technology? You may have to build and operate these plants to actually deploy the technology, which will be very capital heavy for us. But now, this is now a third tick in that box of being able to demonstrate that our business model around licensing the technology can be achieved. So really important part there. The last bit that's really important about this deal is the ability for Rio to sub-license this. What I mean by that is they can take our technology and market it to their customers. And if you think about where Rio's customers are, they're exporting mainly to China and other steel makers around Southeast Asia and the Asia-Pacific region. And so marketing our technology to those players is a really interesting part of deploying Zesty commercially. There's the opportunity here in Australia with a green iron opportunity. Now, obviously, the government's very interested in that. It has the chance to really multiply revenues with respect to iron ore, changing from iron ore exports to actually green iron exports. But the other opportunity is also in places like China. So China has cheap renewables, China has lots of steelworks, and the Zesty technology can be deployed at steelworks. So there's a lot of sinter fines and these sorts of things that a steelworks produces, and the Zesty technology is actually pretty good for converting those sinter fines into a green iron. So deployment here in Australia and deployment overseas. Now, if we just march into China ourselves, I think we'd be chewed up and spat out as a little Australian technology company, but standing side by side with a company like Rio changes the equation for us. So as far as commercialisation is concerned, it's a very significant step for us because of those reasons as well. So just about the green iron demonstration plant itself, excuse me, we're going to be located in Kwinana. We're right over there in Western Australia, proximate to what's called the Neo Smelt project. The Neo Smelt project is a joint venture between Rio Tinto, BHP, BlueScope, Mitsui and Woodside. And the Neo Smelt project is looking at taking a direct reduced iron and purifying it, okay? Our plant produces a direct reduced iron. And if we're producing it from ores from the Pilbara region, that ore needs purification before it can go in an electric arc furnace. It can go straight into a blast furnace, by the way, but it needs purification before it goes into electric arc. And so if you have a look at the Neo Smelt project, its aim, and it's supported by ARENA, and it's got some pretty big partners in there, as I've mentioned. Its aim is to look at how to take Pilbara ores and get them pure enough for electric arc steel making. Because ultimately, electric arc can be run on renewable electricity. Zero emissions steel ultimately will probably be done through electric arc. But there's still 70% of the steelmaking fleet is still blast furnace operation. And so with respect to the Neo Smelt project, it's thinking about the future with electric arc steelmaking. But blast furnace operation is also of interest to us. We can produce a green iron briquette using our technology, and for every tonne of that material that's introduced into a blast furnace, you can reduce the carbon intensity of that blast furnace. So it's a way for blast furnaces, very young fleet of blast furnaces in Southeast Asia too, by the way. It's a way for those blast furnaces to reduce their carbon intensity. So the nice thing about Zesty, it's in this Kwinana region, it's proximate to Neo Smelt. There's a nice pathway through to zero emission steel using electric arc furnaces. But it's also a good demonstration of producing a material that will help blast furnaces reduce their carbon intensity. Ultimately, over time, if you look at the International Energy Agency, they're predicting that blast furnaces ultimately will start to fade out by about 2050 or 2060. So they've got a long way to go. They're quite young, the fleet here, in the Asia-Pacific region. And so Zesty represents a means for those to reduce their carbon intensity as they journey towards a net zero steel. So you can see there, as I say, proximate to Neo Smelt in Kwinana, You would have seen the Premier of Western Australia come out last week talking about a green steel industry in Western Australia. Kwinana's right in the electorate for Madeleine King, the Federal Minister. And you would have seen also the Premier talk about the government assisting through procurement, getting a green steel industry up and running in WA. So it's a great location for us. We have a great partner. That partner is a joint venture in NeoSmelt, so the path through to electric arc is becoming clearer. And you have a state which is looking to really try and grow a green steel industry. So very nice location for us. And just lastly on Zesty, in terms of its development, one of the things that we said when we first published or put a patent in and first started to talk about Zesty in the public domain, we said we wanted to move quickly. So what we've done is actually pretty quick. Between 2021 and 2023, we were able to secure some funding from ARENA. We're able to convert one of our facilities down at Bacchus Marsh into a green iron facility. That had a capacity of 500 tonnes per year, which is definitely not lab scale. We're calling that pilot scale. That was a nice ability to pivot and convert that particular facility to make a green steel. And if you look at a lot of the other green steel technologies today, they're still not at that scale. And so within 2 years, we converted and done some initial test work. And then, again, with the support of ARENA, through the HILT CRC and with 6 of our major iron ore producers, we tested 9 different ores in over 150 test runs through 2024. And that effectively proved out the technology for us at pilot scale. We got excellent results. We went on to win an outstanding project award at Azerbaijan last year, COP29, I think it was. And of course, since then, and only recently, we were able to announce 44.9 million support from ARENA to go and build the next scale up. This next scale up is full scale tube. So scaling up from our next scale is just multiples of those tubes. So we're building a full scale single module version, which is why we're going to call it a commercial demonstrator. A full scale single tube version, which will be targeting 30,000 tonnes per year of direct reduced iron. So that's been pretty quick to move through from 2021, pilot the technology, move through and get the support from the government, and now just as we're able to announce yesterday, get the support of a company like Rio Tinto, the largest iron ore miner in the world, to join us with developing the technology is pretty quick. We're pretty pleased with progress. So where to from here? Obviously, we want to get this final investment decision through. We need to raise that capital either at the project level or into the subsidiary, the remaining capital to go and build this facility. And we're targeting 2028 to commission and start that up and start running. So, yeah, pretty compressed time frame, but we're pretty pleased with progress to date. So they're the next steps in Zesty. Just also recently, we talk about commercial progress. Obviously, yesterday was a pretty big announcement, but one that perhaps went under the radar a bit, but very important, is the announcement we had with Norsk Hydro. They run the largest alumina refinery in the world, in Brazil, and we're able to announce a test work program with them to make low emissions alumina using our core technology, same core technology again. So working with a company like Norsk Hydro, one of the largest alumina companies in the world, again is significant for that particular vertical. It's not quite the same scale as iron and steel. Alumina is only 1/10 of that, but even so, that's a multi-billion-dollar market every year in alumina production. We're targeting the same business model here ultimately, non-exclusive, so it leaves us open to make deals with other alumina players. But Norsk Hydro are keen to work with us to test the technology. We're testing it right now down at Bacchus Marsh. They've sent material over and we've started the test work program that we announced earlier. And so we're testing that material now, and that will then lead into a pre-front-end engineering design study to work out how this can be retrofitted into a running alumina plant. So significant for us, a big opportunity for us, and very pleased to see this one, yet another vertical, another significant vertical or line of business for us, starting to make its commercial journey. So how does decarbonising alumina work? Well, when you're making aluminium, you start with bauxite. You take that bauxite and that gets converted to what's called aluminium hydrate. They basically use this stuff called caustic soda to suck the aluminium out of the bauxite. Now that aluminium hydrate has to be heated up to drive the water off it, basically. And at the moment, that's being done in very large kilns with natural gas or coal. And it's sort of the last bastion of key decarbonisation opportunity in the aluminium industry, because once you've produced aluminium oxide, that then goes into very, very large smelters that basically suck the oxygen off it, and they're electric. And so that particular part is already being done with electricity, converting aluminium oxide to alumina, which is the second part of the chain here. But upstream is where we are. Upstream is where our ZEAL technology can be utilised. So if we can replace a natural gas or coal-driven kiln with an electrically driven kiln, then that is a way to decarbonise that particular part of the aluminium making chain. The other advantages of our technology, the steam that we produce is pure. So as the aluminium hydroxide falls down our tube and gets converted to aluminium oxide, steam comes out the top. That steam is hot. That steam can be used for heat and other energy requirements in the alumina refinery. So it's a way to use renewable electrons to do this process, and it's a way to recycle that steam into useful heat. So that's why people like Norsk Hydro are interested. Quickly through another couple of elements of stuff that we're doing. Obviously, lithium. Interestingly enough, we've seen in the last week or two quite a rally, if you like, or a bit of support coming back and optimism into lithium, which is quite timely. I mean, our plant here, which we started to budget for, by the way, over 2.5 years ago, that's going to be brought in on budget. And as Alison mentioned, in the next few weeks, we're targeting to complete construction. So with our adjusted time frame, we're on time and we're still on budget. Now, for a project in the Pilbara priced 2.5 years ago, that's a pretty significant achievement in and of itself. You can see here the various stages of construction. Nice big truck there with the Calix symbol on it. That got a bit of press as it rolled through the streets of Perth, all the way up into the Pilbara region. And you can see in the bottom right-hand corner there, the nearly completed plant. You can see the calciner in the foreground, the big tall tower there. And then behind that, you can see what we call the hydrometallurgical process. And that's the process to take what we make, which is converting alpha to beta spodumene, as it's called, and to extract the lithium from that beta spodumene. And so naturally people are going, well, great, when are you going to start this plant up? And we've always said, look, we're not going to start to run this plant at a loss. We want to make sure that the market conditions are right. And, you know, Pilbara Minerals, our partner in this project, our joint venture partner in this project, are aligned with that. We're not going to start this thing and run it up at a loss. And so we're a bit unclear when we're going to start it. But interestingly enough, we've got a very close eye on what's happening in the lithium space. So I think the lithium supply was always thought over the course of last year to be well in excess of demand. So a lot of lithium supply came on stream, and you would have seen the lithium price slump to a very low level. And so it was uneconomic to run this plant. But just over the course of the last month or so, there's been a bit of a rally in lithium prices. CATL, biggest battery maker in the world, has kept increasing its forecast of baseload energy storage. So baseload energy storage is where lithium batteries are used to balance the grid. And they've actually seen that start to go even ahead of their reasonably bullish predictions on the amount of lithium that needs to go into baseload energy storage. And so that is starting to create a situation where perhaps demand is starting to match or even outstrip supply. And so it's going to be a really interesting market to watch over the course of the next short term, few months. And so, yeah, restarting this plant and commissioning and those sorts of things, we're unclear at this point, but we're watching the lithium market with interest. Lilac. So with respect to the Lilac part of our business, which is the CO2 mitigation for lime and cement, we did an upgrade on our Lilac 1 plant. to make it electric ready, or what we call hybrid ready. You might remember last AGM I talked about the ability to actually energise our tube with different energy sources. We can energise it with electrons, we can energise it with standard flames, if you like, from burning waste or biomass or standard fossil fuels. That ability to do both and switch between them within minutes is really interesting, especially for things like grid balancing and taking advantage of really cheap electrons on the grid when the sun's shining and wind's blowing and there's excess power in the grid. That actually creates interesting income streams completely separate from the CO2 capture piece. So we've retrofitted the Lilac 1 facility in Belgium at the Heidelberg Cement facility at Lixa with an electric-ready tube. And then we ran some tests on it. We haven't electrified it yet, but ran some tests and got some excellent results. So we're really very, enthused about this ability in what we call the hybrid application of our technology to switch between different energy sources. As Alison mentioned, Lilac 2, we're still waiting to get the permitting through. And also we need the financing coming in at the subsidiary level, at the Lilac level, to move that project forward. So there's a couple of areas there that have slowed that project down, which is a bit frustrating, but we'll work through those. We're working through those now. With Zeta, as Alison mentioned, we've moved into the feed stage there. This is a fully electric lime calciner in South Australia. Supported with 15 million in federal government funding. So that particular project there has moved into feed. Again, part of that Lilac raise, we'll be looking to see how we raise the capital to complete this project, and that'll either be at the Lilac level or at the subsidiary at the project level. And lastly, US. The good news is our projects haven't been cancelled. The bad news is we don't know. They haven't been affirmed yet either. So we'd hoped that we would have heard some news following the US summer break, but of course the US government's been shut down for several months. So we still wait. So we're in a bit of a sort of like Schrodinger's cat. We're in a superposition on those projects. We don't know if they're going ahead or not yet. So anyway, we'll wait and see what happens there. And lastly, just on magnesia, you can see here, and Alison talked to the yearly figures from FY24 to FY25, and what I'll mention here is the quarterly, just compared to prior period, just the quarter just passed, unaudited, but the quarter just passed, significantly up in terms of revenue and gross margin. And so our strategy with respect to the magnesia business is to continue to grow that as best we can. It's generating good cash for the business. It's growing nicely. And so it really starts to underpin and help support all the other stuff we're trying to do in decarbonisation. So a really important part of our business, magnesia. Alison did mention the new contract with Unity Water, one of the largest users of magnesium hydroxide. The extension for another 10 years of the contract with City of Gold Coast. And these guys are also increasing their use of magnesium hydroxide. So Australia, we've been plateaued at about $4 million a year in revenue. That's set to rise significantly with these contracts and with the expansion within these contracts. So we're very pleased with magnesia both across the US and in Australia. So I won't go through every single project here. I've mentioned most of the lines of business. There's no real update in this slide compared to the slide we presented at the full year results. We will continue to update these projects though as we move through, and of course in our half year coming up when we announce our half year results in February. So just in terms of the strategy then, just to be really clear, the commercialisation piece. We're very focused on commercialising this technology. We've had significant announcements just in the last few months down the alumina side of our business and now down the iron and steel. So we're making great progress in commercialising the technology. The cash runway, we talked about 18 months runway at the full year results, very much a focus of this company. I talked about growing revenues, that helps. We've been very prudent on costs. And so maintaining a cash runway is important for us, and we look forward to updating everyone at the half-year results on the latest position on our cash runway. People have asked us, have we cut costs too much? Can we continue to do the projects that we need to do with the resources we have? And the answer is absolutely. And actually one of the things that's really interesting for me is to see how AI has has blossomed over the course of the last 6 to 12 months only, and it's the pace at which AI is improving. So our engineers are using AI. They're using it to help with their designs, to do a lot of stuff that maybe we used to have to employ quite a few people for. And so the use of AI in our business, not just in engineering, but across the business, is enabling us to be more efficient. And we'll continue to explore that and use that as best we can. So keeping a lid on costs, but using the tools that are becoming available to be able to maintain, I guess, the portfolio of things we're trying to do is what we're very focused on. And lastly, licensing and deployment. I mentioned that with respect to, say, the Rio Tinto deal that we've done, the licensing key terms that have been put in place there with Rio and the validation of that business model, the validation of using licensing and royalties as the future of this company. Once we get through the proof of and demonstration phases, that is the business model. That's where we're aiming. It's a high margin royalty, if you like, annuity type stream of income that we're targeting here. And if we can get there, it'll be a very valuable company. So I'll finish on that note. Lastly, again, look, huge thanks to the board for their support and guidance over the course of the last year. Since the last AGM, it's been a tough time in the market. We're very pleased to have updated the market with some great news, which was a long time coming. It's always a bit tricky when you've got something that big and you can't say anything, but we were so pleased to be able to say it now. And so sincere thanks to the board for their support through a pretty tough 12 months. Also, our staff at Calix, if any are listening, huge thanks to you guys as well. They've been through some tough times as well. We've had to cut a lot of costs out of this business, and they haven't wavered. You know, in terms of our resolute, attitude, if you like, our resilience to making sure this business gets to its potential. The staff have been outstanding, and so my sincere thanks to the staff. And lastly, of course, to all of you shareholders, for those of you who continue to support us, even though the times have been tough, I have just the utmost thanks. And so on behalf of the board and the staff, we really thank you for I guess, supporting us through what's been a very tough time. So hopefully the dawn is breaking. Yesterday's announcement is very satisfying for us, and I hope you guys were pleased with that as well. So on that note, I'll finish there. I think we're doing a Q&A, questions and answers now. Yep. So
Yeah. Stay there.
I'll stay here. Yep.
Actually, no, let's swap round because
No problem.
basically. Okay, look, thanks, Phil. So yeah, before we move on to the formal items of the agenda, we're just going to invite any questions that are really about the results for F25 and the priorities for F26. And adjust that. And also note that during the rest of the meeting, we'll have time to answer questions specific to the actual resolutions coming up. But if you've got any questions at this time, just ask that you please introduce yourself and to ask your questions.
It might be semantics, but we keep calling that we're doing a demonstration plant and a pilot. The technology's proven, and I'm assuming it's just slight different configurations or temperatures that actually work in the different industries to the mix that you put in. So if the technology's proven, why do we keep going through demonstration phases? Because that to me sounds like we're still trying to get to the point of having a commercial outcome. And it's been operating in Bacchus Marsh for many, many years. So just a question as to why.
Absolutely. So with respect to demonstration, each industry will want to see it demonstrated on their own material. And each material comes with its own sort of interesting foibles. In lime and cement, for example, when you heat up limestone and turn it into lime is pretty sticky. And so the ability to handle sticky particles is a really important part of the demonstration process. And sometimes that's not evident at a pilot scale versus a demonstration scale, or it isn't evident in terms of its ultimate impact. And so the ability to work out what to do with sticky particles was part of the lime development. And so that is just one example. There's some iron that's sticky and some iron that's not sticky. Alumina, when you're looking at alumina and aluminium hydrate, they can clump before they ultimately get heated up and separated. And so dealing with each different mineral actually requires the development. And so that's why we need to go through this development scale step with each application.
Do you want to also talk about the challenges of scaling as well, and so therefore why it can be proven at the Bacchus Marsh scale, but then needs to be proven in demonstrators as well?
Yeah, absolutely. So at Bacchus Marsh, we've got effectively a small commercial scale calciner, the big picture that you see there. That's for magnesite, and we won't need to go much bigger to actually deploy into magnesite. Certainly won't go bigger in tube. We just have multiple tubes. The same scale tube in terms of its size, a bit longer, is what's been deployed in Belgium. And indeed, the same scale tube is what's been deployed at Pilbara Minerals with electricity on the outside. So once we've proven it at that scale, to go from that single tube to multiple tubes is a simpler, or let's say less risky scale up from that to multiple tubes. So getting these single tubes, full-scale single tubes, up and running for each application is an important step for us.
Great. Thank you. Any more questions in the room? Are there any questions online, Darren?
Yes, we do have a question online, Alison, and it's, thanks, Dan, Mr. Daniel Vasquez. Will the testing regime for iron ore focus on low-grade ores, or will the focus primarily be on mid to high-grade iron ore?
The testing to date has all focused on low grade. We have tested a few samples and runs with what we call higher grade ores, which are magnetite ores, but the majority of the testing's been low grade ores. The reason we've done that is 96% of Australia's exports are low grade ores, what are called hematite goethite ores, and it's the ability to metallise those ores and to get them in a format for export that we're proving, if you like, through the demonstration scale facility. We've already done it at pilot scale. We've produced little briquettes. Those briquettes have to be what's called a certain density to be shipped safely. And so the ability to produce those briquettes with sufficient metallisation, even though they've got impurities in them, at the right density for export, is part of what we're doing here. So while we're focused on those lower grade ores, and we feel that's where the first deployments are happening, and that's what Rio is interested in, and the other players here in Australia. Of course, higher grade ores are not outside the scope of the technology either. We have done some metallisation tests on what we call the magnetite ores, and we'll continue to do that. And they'll be mainly for overseas deployment. Lower grade, because we're Australia focused first in terms of the industry here, but the higher grade ores are also part of the planned development.
There are no more questions.
There are no more questions? Oh, great. No, good.
With Lilac 2, you indicated that we're still going to need to seek some further funding. What is the quantum of the funding, extra funding that's needed, and why isn't Heidelberg coming forward with that funding if it is? Because that proves out the four pipe module, I assume, which is very important for us.
Yeah, so we do have a joint venture agreement with Heidelberg where they have committed some funding to that project, but not all of it. So we've always said we needed to raise some more capital there. What's the quantum? At the moment, we can't talk about what Heidelberg are committing, so it's a bit difficult to talk about the total quantum. When we announced the project, we talked about a 26 million euro capital project. About a year after that, 18 months after that announcement, we went through that COVID period and that inflationary period, and we talked about a 30 to 40% increase in that budget. So we're still roughly there in terms of where we think the capital will end up for this project. So it's not small amounts we'll need to raise. We'll need to raise tens of millions of euros to contribute our part. And so, as and when we're successful in getting that away, and we can talk a bit more publicly about it, we'll update. But it's not a trivial amount. We'll need to raise a reasonable amount of capital.
And I think it's also I think it's helpful anyway to think about the two alternative ways to get to demonstrator scale in cement and lime. One is with Lilac 2, the other's Zeta, which already has a good chunk of government funding. Okay, thanks. Okay, no more.
No more questions.
Thanks, Darren. So we're going to... Actually, we're going to move to the formal items of business, but I think you're going to talk through the voting one more time.
Yes, the voting instructions. Thanks, Alison. So voting for the meeting is being conducted by way of a poll on all items of business. To provide you with enough time to vote, for those joining virtually, polling on the resolutions is now open. For those in the room, polling cards handed to you on arrival can be completed at any time during the meeting and before voting closes. If you are attending online and eligible to vote at this meeting, a voting tab will be visible on the Lumi platform. Selecting this tab will bring up a list of the resolutions being put to the meeting and present you with voting options. Cast your vote, simply select one of the options presented. Your vote is automatically recorded, so there is no need to click a submit or enter button. You are able to change your vote up until the time the chair declares voting closed at the end of the meeting. For those in the room, once your voting cards are complete, they will be collected by staff at Boardroom and tabulated with the online votes. The results of the polls will be published on the ASX platform later today. I'll now hand back to Alison for the commencement of the formal items of business for 2025 Calix AGM.
Thanks, Darren. Okay, so now to the formal items of business of the meeting. So I can advise that 132 valid proxy forms have been received by the cut-off date, totalling 105,529,445 shares, being equal to 49% of the shares on issues. There were no invalid proxy forms received, nor were there any proxies lodged by security holders with a nil balance. Each resolution before the meeting for consideration will be decided by a poll. So the first item of business before the meeting is to receive and consider the financial report of the company, including the director's report and the auditor's report for the year ended June 30, 2025. There's no formal vote on this item, and I note that the company didn't receive any questions on this item prior to the meeting. We now invite those in the room or online to ask questions on the accounts, either of the board or the auditors who are present in the meeting here today. So are there any questions in the room? Okay, thank you. Are there any questions online?
There are no questions.
Thank you. Okay, so I'll now move to the 5 resolutions before the meeting that are open for voting. The first is the remuneration report. The resolution reads, to consider and, if thought fit, to pass the following resolution as an ordinary resolution. That for the purpose of Section 250R, Part 2 of the Corporations Act, the remuneration report of the company for the financial year ended 30 June 2025, which forms part of the director's report, be adopted as described in the explanatory statement. The proxy votes received for Resolution 1 are presented on the screen. Excuse me. If you have any questions on the remuneration report, please ask them now. Are there any questions in the room? Thank you. And Darren, any questions online?
There are no questions online.
Thank you. So if you haven't already done so, please vote using the online tool as indicated earlier or by completing your voting card. As the next resolution relates to myself, I hand the chair to Phil Hodgson.
Thank you, Alison. Resolution 2, which is the re-election of Alison Deans as Director. The resolution reads, to consider and if thought fit to pass the following resolution as an ordinary resolution, that for the purpose of clause 13.6 of the Constitution, listing rule 14.4, and for all other purposes, Alison Deans, having been appointed to the Board of Directors on the 1st of March 2023, and who vacates the office in accordance with the Constitution of the company, and who, being eligible, offers herself for re-election, be re-elected as a Director of the company. The proxy votes received for Resolution 2 are presented on the screen. I'll now invite Alison to speak to her election.
I'll just do that here. So it has been an absolute privilege serving on your board for the last 2 years. As I think you've heard today, Calix is an exceptional company with a rare opportunity to contribute to one of the most important challenges of our time, decarbonising the planet. Now, as we all know, the last few years have been a particularly challenging time in the market for clean tech companies, both for funding clean tech capital projects and for the valuation of clean tech companies. And Calix has certainly experienced these pressures. But against this, the board has worked with the CEO and the leadership team to focus the company's efforts on the most prospective applications and apply disciplined cash management to extend the commercialisation runway. And the team has made strong progress in this commercialisation. They've delivered on new partnerships with global leaders in every segment, validating the potential of the technology and working towards funding at a project or subsidiary level. Over this challenging time, the purpose, opportunity and technology of Calix has united the highly skilled, motivated and aligned team of Calix. That's on the board and on the executive, and it really is a privilege to work with this team. These three themes of purpose, technology and people have been the threads through my career. I've consistently focused on helping to build companies that are tech-enabled, people-driven and anchored in an alignment of purpose and shareholder value. Over the last 35 years, I've worked as a consultant with McKinsey, as the CEO of eBay Australia and 2 venture capital funds, and a board member and advisor to many tech companies. I'm currently the chair of Cochlear and a non-exec director with Ramsay Health Care, and I also serve on the investment committee of Main Sequence, a venture capital fund initiated by the CSIRO and investing in Australian deep tech companies with the potential to solve global challenges. So if elected today, I'd endeavour to bring my experience from all those environments to deliver long-term value for shareholders and to society. I look forward to serving the company and helping realise the potential of Calix. Thank you.
Thank you, Alison. If you have any questions on Alison's re-election, please ask them now. Are there any questions in the room? Are there any questions online?
There are no questions.
If you have not yet done so, please vote using the online tool as indicated earlier or by completing your voting card. We will now move to the next resolution and I will hand back the chair to Alison.
Okay, so the third resolution is the approval of the short-term incentive, the STI grant of performance rights to Phil Hodgson. The resolution reads, to consider and if thought fit to pass the following resolution as an ordinary resolution. That for the purposes of ASX Listing Rule 10.14, Section 208 of the Corporations Act, and for all other purposes, the issue of 160,527 STI performance rights under the Calix EIS for FY25 to Dr. Phil Hodgson be approved. The proxy votes received for Resolution 3 are presented on the screen. If you have any questions on the issue of STI performance rights to Phil Hodgson, please ask them now. Are there any questions in the room? Are there any questions online?
There are no questions online.
Thank you. If you haven't already done so, please vote using the online tool as indicated earlier or by completing your voting card. We now move to the next resolution, Resolution 4, which is the approval of long-term incentive LTI grant of performance rights to Phil Hodgson. The resolution reads, to consider and if thought fit to pass the following resolution as an ordinary resolution. That for the purposes of ASX Listing Rule 10.14, Section 208 of the Corporations Act, and for all other purposes, the issue of 824,758 LTI performance rights under the Calix EIS for FY26 to Dr. Phil Hodgson be approved. The proxy votes received for Resolution 4 are displayed on the screen. If you've got any questions on the issue of the LTI performance rights, please ask them now. Any questions in the room? Any questions online?
There are no questions online.
Thank you. We'll now move to the next resolution, and as the resolution relates to myself, I'll again hand the chair back to Phil Hodgson.
Thank you, Alison. So we now move to Resolution 5, approval of issues of shares to the directors in lieu of fees. The resolution reads, to consider and if thought fit to pass without or without amendment, each as a separate ordinary resolution, the following. That pursuant to and in accordance with Listing Rule 10.11 and for all other purposes, shareholders approve the issue of director shares as follows. Up to $107,500 worth of director shares to Alison Deans, up to $67,500 worth of director shares to Helen Fisher, up to $67,500 worth of director shares to Dr. Sarah Ryan, and up to $67,500 worth of director shares to Peter Dixon, or their respective nominees, on the terms and conditions set out in the explanatory memorandum. The proxy votes received for Resolution 5A to D are presented on the screen. If you have any questions on the approval of the issue of these shares to directors in lieu of fees, please ask them now. Are there any questions in the room? Are there any questions online?
There are no questions online.
If you've not yet done so, please vote using the online tool as indicated earlier or by completing your voting card. I'll now pass to Darren.
Thanks, Phil. If you have not yet done so, please vote using the online tool as indicated on the screen. I'll just leave a bit of time for everyone to finish their voting. That concludes our discussion on the formal items of business.
Okay, thanks, Darren. Before closing, we'd like to provide a final opportunity for questions and answers. So are there any final questions? Darren?
There's no questions online.
Great. So that concludes the business of the 2025 Calix Annual General Meeting. Thank you for your attendance, and on behalf of the board and the whole team at Calix, we thank you sincerely for your ongoing support of Calix's goals and ambitions. We look forward to providing you with regular updates on the progress in the 2026 financial year. Thank you.